Welcome back to the channel. Let's pick up where we left off with the crypto and Bitcoin trading over the last few days. We've covered a lot of the macro stuff, worst case scenarios with Bitcoin. So let's look at the short-term timeframes on Bitcoin and cryptocurrencies. As the last time we've seen some of these patterns play out, we've gone on a massive dump after that period. So let's start off with the shills, the likes, subscribes, bell notification icon does help out the channel. And I would very much appreciate it if you took that couple of seconds to click the buttons. And of course, channel sponsors, Bybit, link in the top of the video description, $4,450 of sign up bonuses that you can use on the platform risk-free. Check it out, link in the video description. So Bitcoin is where we are starting, and then we're going to cover cryptocurrency as well in terms of the pattern. And last time this thing happened, we saw a 61% drop. So Bitcoin, where we left off a few days ago, this is on Twitter. So if you're not following, I know it's another shill, but just don't get scammed out there. If you want to follow, use the official links in the video description. 1 week ago, 30th of June, this was the price range to test. Just tested 18,900, almost to the dollar. It was very, very close. And you can see I was just posting about this here. The reason why I was looking at that in such fine detail and talking about it a lot, bringing it to our attention, is because it has formed a very significant support level for trading in this short term. So I bring that up because we need to know about these levels if we are going to understand what's coming next. I know I don't look at the news a lot because honestly, the chart really does show us what we need to know. It tells us the facts. It tells us what the buyers and the sellers are actually doing in real time if we can better read the chart itself. The news is always lagging. It tells us what has already happened. So 18,900 and 19,000, so call it 18,950, is essentially these tops from the low. And I really emphasize this point a lot. This was on the 30th, the market came down, tested it, and then the bounce back. And what we were following was on the hourly chart from this bounce as an entry being just above the swing top. So this swing tool here, just up in the top here, TI again, swing. The market as a trading opportunity can be entered above those swings. So the trend has reversed, market is up. Now, because it was such a big bounce, we were following this as stops to be placed underneath the bar lows, because I said in that video, I felt like this would just come back and test the lower prices because it was such a big move up. And that's essentially what the market has done. Now, it doesn't always work like that 100% of the time, but more often than not, when we do get these big pumps, you guys know, you've seen it before, the big red dildos come out the other way and just basically wipe out that entire move. So if there are any gains made, then personally, I'll just like to lock them up, especially when the market is basically trending sideways. So since that point, we've basically been chopping and churning around the 18.9 and almost the 50% level, which was the 19.7. So that was the next tweets that came up here. I was looking at the battle at around 19.7. So we didn't see the market get too close to that. We got 19.6, yeah, close enough. But then we put in higher lows and tested the 19.7. We tested the 50%. It broke through, came back and sat perfectly on top of that 50% level and then took off again. So this is starting to form that early stage. Might not always work out, but it looks like it's an early stage for that crypto pump that we've been waiting for since that low came in. So this pump really wasn't that much from the 19th or that, the 19th of June low that came in on the market. This was a big scary day at 17,500. We only pumped up to about 21 something. And that was the price for the resistance. We look back in the chart to find our support and resistance levels for the trading to let us know what's coming next so that we don't get freaked out by any of these drops in the market going from 21.5 down to 19.8. It's not that much, but it does freak the market out. You see that extreme fear and a lot of fear come back into the markets when that happens. A little bit of a double top came in here, the fake out above the level. Market could not get above 21,400 for a close. Yes, the price did peak out above it, but on a larger term time frame here, the 4 hour for a trader, I know for a daily is a much better longer term time frame, but we can see here on the 4 hour, poked its head above, kept poking its head above, one close and swoop back under, one close, back under, another poke above, back under. So that's when you know that that level is working, because you can see the market really playing a game around that level. So the 21.4, you can see the lowest swing top rejected at that level, and then down we went. So that was another good looking short signal through that. You can see all the swings start to play out and down she blows. So that's catching us up on the last week and going all the way back to the 19th, basically the last couple of weeks. From this point, we've broken past our 50% level. The market has gotten past this battle. So the battle is now over. This is on the shorter term time frames, so the 4 hours. The next stage of the battle potentially is to come back and test that level. So you could say the battle was slightly still on, but it looks like we've got quite a few closes above, and that this should at least hold in the short term. Just talking hours here because we are only on a 4-hour chart. If that holds and we get a lower top, that's going to be a weak signal that will probably crush back through. So the bears would then be in control again, and this recent bullish action is possibly over, at least in the short term. The worst case scenario here is we get the drop to the 50%, lower top form, break under the 50%, lower top into the 50%. So basically the weakness and then the rally is getting rejected at that strong resistance. That is a very, very weak sign. So we want to stay above this level. We want to stay above 19,700 for the long trades. And this is going to be the important part for crypto that we'll look at in just a sec for the long trades on cryptocurrencies. Now, in a more macro sense, this is the shorter term timeframes. This is what we are looking for coming next. For the longer term stuff, maybe into the days, yes, this is only just trading on this, we would be expecting a slightly higher move from this point. And this could then lead to the bear trap, and that's going to be expanded over the coming weeks. So we've gone from the hourlies to the dailies to the weeklies to get ourselves set in positions and then keep a lookout for the macro view. So we need the macro to keep playing out to the upside, even though we could expect a bear trap form and then get crushed again. But in terms of the short-term stuff, it is very much in the bullish favor that we can see here on the chart. That's what the buyers are doing. The prices are getting supported, and they're getting supported at key support levels, which were once resistance. So we got the support and resistance flip. So this is all checking off quite nicely for the short term to the upside, but the longer term, days to weeks, still hasn't confirmed that we should see much, much bigger upside. But at least we're working towards that trend now. So I know it can get confusing, but this is essentially what we look for when it comes to trading. We need to understand what's going on the macro sense and of course the micro, because that's the trading opportunities. So in terms of the macro sense, we're just looking at the possibility of the bear trap. Basically, bear trap technical pattern that occurs when the price action of a stock index, obviously in this case cryptocurrency, incorrectly signals a reversal from the downward trend to an upward trend. Now I wouldn't say that it's incorrectly, it's actually just a rally, but you could say it's incorrect that the downtrend is still in play, and it's basically just a rally within the bear trend. So the way to invalidate this then is if we were to see a higher low form, so we start to get a move up over the coming days and weeks, and then the market come back, test some of these levels and start to move away again. In that case, the trend has at least changed for the daily or the weekly, and we could possibly expect some higher prices on the daily or the weekly chart. So that would then give us more emphasis to the bullish side of any trades. Now, before we get there, we've got a few key levels to get past. Currently, market's sitting at around 20,200. The peak here is at 20,008, so that's about 3%. Those tops that are coming in at 21.4, about 6% away. And then if we were able to make it all the way back to these peaks before the market dumped, that's sitting at about 14% away. So still there's some room to move on Bitcoin leverage trades here at this point. And then if the market was to get very bullish to the upside, we might see upwards of about 40%, maybe as weak as 26%. So you could really start to see some moves on for Bitcoin. Now, I always remember seeing some of the comments, people saying it's impossible, can't happen. Doesn't matter. We don't know what is actually going to happen. We just need to prepare for any of the options that may happen and then put our trades in accordingly. What do we think the market's going to go up to those highs or not? Maybe keep the stops closer if you don't believe it's going to be a strong run up to 28. If you think it's going to be a weaker run, then you'd keep your stops a little bit closer. If you think it's going to be a stronger run, then you might let the trade move and swing and breathe in case it does move up and come back and continue on. That's all it is. We're just setting up for what might happen the best way we know how. Speaking of the best way we know how, that's where we move to the macro. So let's take a look at the macro and what is going on. This is the weekly here. This is a count of how many weeks the market has moved up within the swings. and the swings are the most important here using our Gann swing indicator. Of course, there's a link in the video description. Where else would it be? Looking at the upside for the percentage moves from the swing lows. So the previous move up was only 27%. This was from May, and we got that move into that late May, early June period before the market dumped after that point. Previous to that, we had just a week up. It was barely a week up at that point, only about 8%. But then we went on the big bear trap. That was January into March. This was the lead up into the Bitcoin conference in Miami. Everyone was excited, but this was a very, very clear bear trap. The market just wasn't moving that hard. There was still enough to get about 46% from the low to the high. So there were still some trades to be had within altcoins, but ultimately, the market did dump from that high to that low, 63.4%. So it did have the first dump at 18. The next dump was 47 from that peak. And then ultimately we got down to 63.4. So really on the short term, we're just looking at the possibility of any sort of move up to possibly the 50% level, which gives us around a 41% move from the low to the 50%, which is around 25 grand. So we're keeping the Bitcoin macro in check, just seeing what's going on so we can know whether our crypto trades might eventually burst and at what point might they burst. So we're just keeping an eye on Bitcoin and whether it can make it to its critical level, 50%. We know that these things are very, very important. So that's at around 25K. So it has some room to move. There is some breathing room before maybe we get another move back. So with that in mind, for total 3, what happened last time? So this is all the crypto market caps, excluding Bitcoin and ETH. From the low in February, even though Bitcoin had that low in January. So basically these lows, the low to the high. So this was that bear trap rally. The last time this happened, the market went up 44% and ultimately dumped from that high. First dump, 19%. Next dump, 52.88%. And ultimately to the current low, 61.75%. And so if we were to get this bear trap, which is very, very possible. The market has been trending down for some time and it does need to go on some sort of rally. The downside, depending on where this market gets rejected at, whether it's at 1, 2, or 3, these are the levels that we've been looking at over the last month, these price ranges here for the total market caps, then potentially we got a few options of how far down it could drop. You got the next low down at 30%, but if it was to go all the way down to what it had before, around 61.7, that puts us back into this zone, which could potentially be one of the final dumps in altcoins, but they could trend around lows for some time, which we've looked at. So going down 61%, that sets us out about $180 billion market cap right in this zone. So I'm being quite patient with altcoins. I think ultimately we've got to get somewhere close to this. We're still quite some way away. Maybe we hit the top, maybe we come back into the middle, maybe into the lows of that. But either way, I still see a dump coming. I don't know if it's going to be quick. I think we might have a little bit more time here, chopping and churning, which is basically what the bear trap is doing to set us up. Some moves up, people are going to say, oh, I missed out on altcoins. Basically, the mindset that comes in here is, damn it, I missed the low. I need to rush in because the alts are going to push up again. Is exactly the same that happened last time here in January and February. A lot of us were saying it's not time yet. If you're looking for trades, it's definitely a trading opportunity. But if you're looking to dollar cost average and buy for the long term because you think this is the final low, then I don't think it is. That's obviously my own opinion, which is why I'm not getting into altcoins just yet. I think we still have more of a grind to go, but I'm being patient. It could take weeks, it could take months. That's just what I'm seeing here on the charts. And it's what I'm sharing here with you guys. So if you love the sound of that, you want to continue to join the journey here, you know what to do. Smash the likes, subscribes, all those things. Click the buttons. Chat in the comments section. Otherwise, use the links in the description for Bybit. You can trade over there. Keep yourself safe. Use a plan. Use stops. Just stay safe in the markets. All right, guys. I'll see you at the next one. Potentially, I'll be in Europe by that stage. So hopefully, I'll join some of you over there in Italy or Greece. Another couple of days, I'll be back online. Catch you next time. Till then, peace out.